What's up, everybody? Hope everybody's doing well. Thank you for joining and welcome to my very first podcast here on YouTube. For those who don't know me, my name is John King with Berkshire Hathaway RW Town Realty, and this show is all about answering real questions from real people, my viewers, my clients, friends, people just like you. So before we dive into this first episode, here's how the show is going to roll. I'll be doing this show on the second Wednesday of every single month, picking a couple of questions I've received from all of you. So if you've got a question, email me, kingjohne@gmail.com, comment, Facebook, whatever, let me know, and I'll be breaking down these questions each week. So there's not going to be any fluff, no crazy jargon, just the truth and a little perspective from, over a decade of transacting here in Hampton Roads at a high level. So let's go ahead and get into it. The first question comes from one of my Facebook friends, and it goes a little something like this. John, there's been a lot on the news about Trump putting out a 50-year mortgage program. Can you tell us what that's all about? Great question. And that's one that's been blowing up online. I've had calls about it, texts about it. And so obviously this makes for a good question to start the show. Now I know how it goes too. Social media gets a headline, people start spinning it, and before long, hell, nobody knows what's true anymore, right? Everybody's got a different take. They're spinning it for their own motives or whatever. So today I'm going to slow it down, break it down with this, what it really means rather for people in real life. So we're not going to make anything up like we've seen. There's no twist on it. I'm just going to give you the real facts, real truth behind it, and some of my thoughts on it. So the idea of a 50-year mortgage sounds simple, right? Stretch your payments out a little bit longer, make your monthly cost a little bit more affordable. Hell, make housing more affordable. But here's the truth. It's not about affordability. It's about accessibility, right? Accessibility. They want more people to get into homes. It's a business as well, right? A lot of the economy rolls. The GDP, about 20%, a quarter of everything is in real estate. It's not about just housing. It's about everything you do when you buy a house, moving, renovating. And of course, all the lenders know how tight the market is right now. Rates are up, prices are up, and they're just looking for some creative ways to help people get in the door, especially first timers or entry-level price points. And honestly, I don't think it's a bad thing. I mean, if it helps first-time home buyers or entry-level buyers finally get into home ownership, live the American dream that they've worked for and are earning, how could you say it's not a win, right? Now, I know what the critics are going to say, and they're already saying it. Yeah, but you'll pay way more interest. And you know what? They're freaking right. Yeah, you're going to pay a whole lot more interest. But let's be real for a second. Let's put this in real world perspective. I mean, who do you know that's actually stayed in their home that they've owned for 50 years? Crickets, right? I mean, heck, who do you know that's even stayed in their house for 30 years on the same original mortgage? Crickets again, because most people move every 7 to 10 years. Jobs change, families grow, life evolves, right? It's life. Changes happen. So this isn't about locking someone into a half of a century of payments, making banks rich. It's about giving people a starting point when affordability is at an all-time high. It's unaffordable for a lot of people. So sure, you're going to pay down the principal slower, but here's the thing. Equity is not made by making extra payments. It's built through time, ownership, appreciation, upgrades, etc., right? You hold the asset, it grows in value, and that's where the real wealth and the real equity come from. So when people ask me, hey, John, what do you think about this 50-year mortgage thing? My answer is super simple. It's just another tool. It's just another tool. And you know what? It might become the new normal, right? 15 years mortgage was the standard. Then it went to 30. People freaked out then. So, but if it helps more people become homeowners, great. It really only, in my opinion, becomes ridiculous if you buy a home, finance it for 50 years and plan on staying there and paying the loan to maturity. And let's be honest, nobody's going to do that. It's not about debt. This is about leverage and lifestyle, getting in, building roots, building wealth, and moving forward as life changes. That's what real estate's about. That's what life's about. So, hey, thank you for that great question. I hope it answers it. Thank you for taking the time to send that in. I appreciate it. I think you nailed a great question that has a lot of people thinking about things today. So really appreciate that. Moving along to question number 2. This one's been a hot topic as well in the news. So thank you for taking the time on Facebook, for DMing me on this. And for now, I'm going to keep the names kind of just confidential, right? We might release them, depends on what they have. I'll have to ask their permission first. So the second question goes a little something like this. John, we've heard that Fannie Mae is eliminating their minimum credit score requirements to get a loan. Can you tell us what that's about? And thank you for all of your videos you've been posting recently. I am really enjoying them. Well, first off, thank you for the great question and your kind words. I appreciate that you're watching and supporting what I do here. Really appreciate it. Take the time to say that to me means a lot. So let me go ahead and clear the air up. Fannie Mae is not saying no credit, no problem. What they're doing is trying to modernize how they measure financial trustworthiness. For decades, everything's been about that one freaking number, right? Your FICO credit score. But a lot of responsible people, as you guys know, they don't fit neatly into one little box. A lot of people don't. Maybe you have been paying your rent always on time for years. Maybe you've handled your bills, saved money, but there was one little rough patch that tanked your dang score. I think it's happened to all of us, right? At some point. But that doesn't make you an irresponsible person. It just makes you human, right? No big deal, really. So now Fannie Mae is exploring new ways to look at a person's real life payment habits. Your utility bills, your rent history, consistent bank activity, income, not just loans and credit cards and things to that nature, unsecured lines of credit. But it's not going to be a free-for-all. You're still going to need to show your income, taxes, documentation, and proof that you can pay the loan off, that you have the ability to repay the loan that you're borrowing. It's a step towards something I think we've needed for a long time. Common dang sense lending. If you're a buyer, this might open up doors for you that were never possible before, helping you get there sooner, right? If you're a seller, this could mean more qualified buyers showing up for your home to look at your home, which is always a good thing. The more people out there looking at homes is a good thing for you as a seller. But either way, it's a reminder that real estate and life and lending is always changing and evolving. Nobody likes change. Heck, sometimes I get mad about change, right? But hey, it's part of life. We got to get used to it. Embrace change. It usually ends up for the better in the long run. But to clarify, Fannie Mae, Freddie Mac, FHA, VA, none of these organizations actually even lend money. They guarantee or insure the loans so private lenders can take the risk. That means your individual bank still decides how they qualify you as a buyer. They're just not forced to rely on one credit score anymore. So to me, this is a part of a bigger effort to get more Americans into homes. And we'll just have to watch and see where it goes. It looks like it's a bad thing. Or a good thing rather. It's hard to argue that it's bad. But again, it's not a green light for everyone to buy, but it is a sign that the system is starting to shift and be a little bit more flexible. And I think that's worth watching. So we'll just have to see where it goes. No reason to freak out. There's no reason to get crazy about it or say it's stupid. These ideas are dumb. But just want to sort of recap. A 50-year mortgage might sound like something new, but it's just another tool. It's just another financing tool, one that can help the right people in the right situations. And as far as the Fannie Mae credit changes that we're seeing, that's the lending world finally catching up to how real life works, right? At the end of the day, your home isn't just about numbers on paper. It's a chapter of your life. You want the financing, timing, and a plan that supports you, not something that's going to trap you forever or make you hate your life, ruin your life. We want it to enhance your life, and that's what these programs are aiming to do. So if you're thinking about buying, selling, upgrading, downsizing, I want to talk to you. If you want to get the right facts, give me a call. I'm not just here just to sell you something. I want to make sure that you're educated so that you can live that American dream that you deserve. I'll make sure that your decision makes sense for where you are now and where you're going to be headed to next, right? So important. For those of you that don't know me, I'm John King with Berkshire Hathaway RW Town Realty. I'm going to help you navigate the market with strategy, common sense, and a little bit of heart at the same time, all right? So this is going to wrap up episode number 1 of the show. Thank you guys for joining. I hope you found it to be of value. I think I'm going to call this podcast Behind the Real Estate Curtain with John King. What do you all think? Let me know. Drop a comment, hit the like button, share this with someone who needs to hear it. and don't forget to subscribe. Again, really appreciate it. I'll be launching this second episode next month, the second Wednesday of December. Give me some of your questions, concerns. I'm going to break them down next month for you. And as always, I'll see you around town.